So thank you so much for joining our new series of Baachu Together webinar. Hi, I am Bhaskar Syndrome, and yes, this is the topic that we are going to talk about, which is why UK FM market is screwed. And I know it's a big statement, but let's just go through some of the challenges in the industry, which we all know it exists, but for some reason we just stick along and we just move on. And I just want to bring it all together and see, hey, it's like today everything works, but at some point when things start to connect with each other, and that's what happens, what we call a multiple organ failure or something like that. And that's the thing which I want to raise today with a few industry colleagues, and then see how we can collectively start to address that if possible, as soon as possible. That's it. And many of you will be listening. For you, yes, it will be available on demand only for 5 days. After that, we'll pull the plug in, and that's only for people who have registered for the recording. For others, it won't be available. So that's it. So what is it? As I mentioned, at some point, somebody needs to say the truth. And I know this industry has accepted me, and you know what, we work with a lot of colleagues across the industry, different stakeholders, different types of people. So it's time. So okay, we have done enough. So it's time to speak out the truth. So again, many of these pointers, as I mentioned, is you might be familiar with this already, but let me speak it out. And most probably you'll be nodding your head there, or you might be disagreeing. That's not the case. But let's just talk about it, and that's the whole thing. And this, as I told you, it's about Baachu Together campaign, which we launched in 2020 March, where we started to share, we started to bring in the buyers, the suppliers, the chief execs, to the SMEs, to the investors, through our discussion forums, through our podcast, and also some of the veterans, which we started to document the stories, because end of the day, everybody works hard. Everybody is trying to do the right thing for the society, for your company, for your family. But there is something, that's the gap, because it's mainly because of the institution we belong. And that kind of dictates few sort of behaviors that we need to stick into. But otherwise, these are the kind of elastic pulls that we face together. But beyond the scheme, I can promise you, there are everybody is good, and that's the reason we are even opening up and sharing you with this. So this is our thing. We've always been impact driven, and that's the focus for us. And today the session that you're going to focus is much more of the impact that we have created and the impact that everybody has created for the industry. But there are some gaps. So I will talk about the details behind it. And this is just for the past 6 months. It started in November last year, where we started to have what we started our unprepared conversations immediately after COVID hit. So many of you might be familiar with our COVID, 1 month into COVID, 6 months, 1 year, 2 years into COVID. And this is more or less the 45th webinar that we are running in this past 2.5 years ago, 2.5 years. So, there is the contract standards data that we rely on to just say why this is happening. And then over the years, there were lots of conversations, but then we reached out to specific people, both the buyers, both the suppliers, and some of the fund managers, hedge funds, investment funds who specialize in the sector, to just see what is their take on what's happening. Because we had a few things that happened to us, like Brexit and stuff in 2018, Caroline and stuff in 2018. That's where we came into the picture, and that's where you're going to see the lots of connections that's going to go. Interestingly, as we always say, the COVID talks are always around reactions in the market, how you reacted, how I reacted, how a company reacted, how the government reacted, etc. And what we see today is the collection of all those reactions and this impact in the market. So this is why it is. And most importantly, in this 2-3 years, things start to get accelerated. FM already, I know David is here. I know Martin Martin always used to say, hey, FM used to have 160 plus services. My mind spins around it. But yes, it's good, but is that what we want to do? And then why are we still at the bottom of the value chain is something that we need to look on. So today, we won't be covering these things, and there are other software elements on central government and other things on how market perceived, etc. We won't be covering. But what we'll be covering today is we'll be asking some beginners, basic, important questions of, can FM continue to be singular? Can it continue to say, hey, on the horizontal wise, we accept anything and everything that's thrown at us, but on the vertical level, we are still considered as not a value-added function. You might disagree with me that, but I will come back to you on that with the very first slide after this. So because now we are accumulating even more than what we used to accumulate, ERP, enterprise resource planning tool, because we are moving into employee-related stuff. The assets, building assets, yes, CRMs, supply chains, workplace, ESG, tech, which means I used to have a slide, who am I, with the identity thing, because for the workplace futures and stuff, that identity crisis is going deepening and deepening and deepening, and that started to put a massive hole on the market, whether you know or not, which will come and address, which allows us to use us. Pretty much the industry has been manipulated. I know it's a big way. The industry has been manipulated by others so that they take whatever out from you and they make a lot more than you. And that's why we are still a 2% market, margin market. So we just look into this, and it's not just you, it's the private sector, but it's also the public sector that also works in silos, which had its own challenges, because I know we have a lot of head of properties from local councils, NHS, and some even from CCS registered for this who will be listening later. And they might agree what CCS does to what local councils does in social value different, what NHS does, the policies does different, but end of the day, we all support them. Why can't it be congruent? No, again, that's the market tension, because they belong to an institution, they work for the institution, and that comes with its own challenges, but you as a supplier needs to cater to those different markets. So compliance of othering to all these things has become a massive industry in itself, which you agree. So again, the point here is, while facilities have operated in the market on their own, will these services be closely linked? Which we say yes. And today morning, I saw a note from David that said, yes, we talk technology, but where it's being deployed, which is fascinating. And that's the main question, because we will be touching it, which will be heartbreaking for you. At the top, we are not wanted. We'll begin with this particular number. We went on and we took over 1,000 businesses in UK, both commercial businesses and some public sector clients, and then say, okay, you know what? That's the turnover, that's the overall spend, and what, there were a few anomalies, etc. But how much do you think is the overall FM spend based on the top, banks or the big local estates and other things, and we kind of highlighted manufacturing and stuff. So we picked up 5 big sectors, as central government, local government. Then we also picked up the manufacturing, retail, and we looked at commercial buildings, and we after 1,000, just, hey, it's 0.1% to 3% of the turnover, could be this. And there were some anomalies, some cases there were 12%, etc. And this was an interesting thing. Then I posed a question to the 67 chief execs in all those things. The thing was, for some reason, this is the perception, and this is the first challenge that I'm giving you. Even though we are very low in the turnover of the percentage, when they want to cut cost, the top 3 services that they look at is always FM is part of it. And that's something which gobs, I don't know what's the right word there, that really shocked me, which is like, why is it a service that's 0.2% to 3% of the overall turnover is still top of the agenda? And why did we allow it to commoditize it so, and we are still commoditizing it? And now we are adding more and more towards it, which means you are actually doing more for less, but your perception in the overall market is, if you want to slaughter costs, let's go to the FM people. And you might be experiencing that, because I just wanted to be slightly more interactive. If you agree, disagree, please use the chat here, and I'll open up and we will have a chat about it, because this was really, really gobsmacked. And then comes this one, my God. I mean, like, this question is fairly simple question, but the underlying foundation of FM is cracked, because this is creating a lot of issues. If you go and have a look at any company website which runs FM, the way they define FM, what they do FM is totally different. If you go and see what the government, the FM framework that recently came out, defines FM, totally different. If you go and look what IFMA has written in their definition, if you consider them as an industry body, which you'll come back to it later, this is the definition. Is it as simple as we look after buildings and people? Is it as open as that? And You have this additional functions that goes behind technology, and they define differently. You might be thinking, yeah, I don't care, the FM is FM, but you know what? We need to have an identity, and that's my underlying principle. And the more we widen, we are starting to see cracks, big cracks, just because of this. And I will come back to it in the coming slides. But again, if you think what FM is, I suggest you type in the chat, because again, what this is we have Baachu Scribble, which is our B2C community. It's a lot slightly more interactive. And here it's slightly B2B. So I just want you to say, okay, from your perception, what do you think is FM? Because many of you have 25 plus 30 years worth of experience, and some could be fairly new, 10 plus years. But end of the day, it's important for us to say what is FM, because while passing, just having a dinner just last week, a chief exec just say, she asked me, 30 years, used to be well-known person, one top 5 FM companies chief exec. She just bent down and said, what do you think is FM? And I don't know. And that's the answer I'm posing. What exactly is FM? And I know it's all great. We are converging with the ERPs, the assets, the energy, net zero and stuff. But go back to the very basic. What is FM? The more delay that you help to leave that to it, it's going to crack it. But we have to define this. I will tell you why we have to do this, but we have to then go back and bucket, okay, FM is hard FM or soft FM, or FM is based on some functions, which you saw in the previous slides. So hard FM, soft FM, and these are the other services. Fine. Then comes this one, additional services. This is where it's chaos, total chaos. And why do I say it's a total chaos? We will come back to that in the public sector, because supposedly public sector data is publicly available, whereas private sector data is not readily available. Okay, fine. Let's go back and dig. What is the private sector data? We will talk about OJEU trackers first. So there are 300 plus OJEU trackers. These are the things that put your daily digest into your inbox. Some publishes daily. You could go put your keywords in, and then it just pumps your content. Some charges up to £35,000 a year. Just because somebody bought it, others have bought it, and then you have some free trackers, and then they go for it. So either way, the irony is all these companies who purchase trackers, especially all the strategic suppliers, we support everybody with their pipeline generation, which means these OJEU trackers, all they do is somebody have to put it in a certain format, in certain keywords. We call it CPV codes. And if you go and put those keywords, this just collects it and it's sent to you. So interestingly, the subscription cost goes to £35,000, but you could make a one-off £35,000 and you could get all the 600 sources and you don't need to pay anything, which we try to do for a few clients, but that's a different story. What that means is it's a very tactical market, very, very tactical market. Day-to-day basis, things come out, you click, you react, to go for it. But what happened before? Because we haven't firmed up what is FM, the additional services, this is the chaos. Again, I don't know. The public sector perception of FM is different. We haven't firmed up what's the correct CPV code. It's been done long time ago. Who is going to do that? And what that means is we found out the public sector, which we believe is close to 50 billion market, there is a small portion, which is, close to 1 billion worth of opportunities got lost. When I say got lost, it means they weren't even tagged in FM. If using our pointers in the table that you find, they are FM, but they were not even FM. But if you are relying on this, the very first thing I suggest you do after this is, yes, there is a challenge. There is no consistency of what is FM, and that's already impacting the CPV code in public sector, which means there are many projects are going through the cracks. And it gets even worse when you call projects part of projects as FM. Many of the projects are not even coming as FM contracts. It comes as maybe construction related projects, or you could say it's construction project, but it's not. We went specifically and analyzed projects, hardcore FM projects bucketed as construction, comes it, nobody, it's pretty much lost, and the companies who won are all surveyor companies, no FM, they subcontract to you as FM providers. Then comes anything related to IT, IT maintenance, etc. It's all employee training, all tagged under FM. Yes, there were some points You find what they call the test centers tagged under FM. Okay, fine. Suddenly there is a huge, people who just take it as a face value of all the FM reports that gets published and say, this is this. The biggest part is we need to remove a lot of duplications. We need to remove to really understand what is FM market, which will come back in the very end. The data points are so messed up. So today, the industry is missing a lot of opportunities, or it's something that genuinely us, because we have left what supposed to be us and we are running around what something that we have some say on. As they say, what's a core market? What's your adjacent market? We have been focusing heavily, moved on from the core market into adjacent market, but because of that, the core market is dusted. So I just want you to look back into your own trackers if you subscribe to, and then see what it is. There are free paid trackers. Go back and see why is it, what is it, etc. You may be able to do something on that. So then comes this one. So the whole thing, we had an entire COVID situation. We talked about how close to 1,000 plus contracts were terminated and it got procured in our COVID webinars. And there are different types of buyers in the market now, like how we are talking, here we go from the heart. Some buyers were genuinely like, what, I actually don't know what's happening here. So let's just renew. Some said, what, it's not been working, let's terminate it. And so some started to behave badly. Some, everybody reacted differently. But the point here is this. Today I saw a post on cobots. Yes, it's all great. You know what? The soft FM part, we did a massive analysis on insourcing in the FM market. And whatever you talk about innovation, whatever you talk about what you do is not perceived at all in the soft FM side. Especially I'm talking about cleaning, security, and the other type of it. Yes, you might say you have a market. Yes, there are a lot of providers in this, but it's becoming really challenging to justify the real value FM is actually adding. Yes, you can add some technology. Yes, you can do something around it. But it's really becoming, London is really becoming a hotspot for insourcing. And then just in this past 1.5 years, in 18 months, 30 plus FM contracts were insourced, predominantly soft FM related. Yes, there are different stories around it, but did we collectively as an industry went back and said, what, individually, yes, yes, it's got insourced because of various reasons, substandard services, or they genuinely want to take it in-source because they don't really add value. But what the biggest thing, one of the largest FM retail contract is being taken in-source. Who's going to manage it? Just guess. It's an IT company, Accenture. 8-figure, 9-figure FM contract over the period of 10 years. Accenture, FM. Right? So your competition is not, because they see a market, because we went so wide. Even so wide, ESG, net zero, you name it, so wide, it enables somebody else to come in, say the same thing, and tell you, hey, why are you doing this? We can provide. So you talk digital, a tech company talk digital, who would they trust? Who would they put money on? Right? It's becoming really, really, really big. So outsourcing as a model, especially in the public sector FM, soft FM cleaning related, and NHS, local council, etc., will continue to, unfortunately, continue to be questioned, and it will continue to be challenged as is this the model that we want to go for? Other than the same cleaner, same security guard, changes batch every 3 years, the same thing. That's it. That's something. That's all. Because it's very regulated, because living wages and other things, again, something that we need to think carefully. So part of the whole thing, when we realized insourcing is happening in the public sector massively, we then went out to commercial enterprises and also to check very, very quickly, just before Christmas, around November time, and that, hey, a quick poll, all to the chief exec, no head of properties, nothing, and all to the chief execs and to the board. We just 3 people. It's a chief property officer, chief exec, and then the CIO. I'll come back to you why I say CIO. Now, perception, because you might have a perception that head of property, you have good relationships, this, and we just send them, here we go, 3 questions, answer it, and then let's have a 15-minute call. Will you stay or will you replace? That was a question posted, and collectively it was sounded thing. Interestingly, there was a time, where the incumbency used to be this, my God, this company running this contract, it's impossible to get that contract away from them. It's they retain 95% of the contract. So let's not bid against them. And that's the same story across the industry, where anybody, if it's a new outsourced contract, yes, it's easy. But if it's a contract that's already been outsourced, which is the case for UK, any incumbent will actually retain the contracts. There is a lot of respect in the market that incumbent retain, but today incumbency is at its lowest. I'm not saying just because we did the survey, we also bid for contracts, but it's something that we need to look on. Why is incumbency at its lowest? Why do we treat renewals the same way as new business? Many companies have a massive cultural impact where they are remunerated only for new business wins, not for the renewal wins. Because of that, this is happening. Incumbency is at its lowest. So when you're talking about your NPS, customer experience service, etc., 3 big contracts with an NPS score of 9 out of 10, where the teams were very happy, they enjoyed it. This is from 2 different companies, enjoyed it, where went off because your NPS and customer experience service doesn't always reflect the true relationship strength. And again, like the OJEU trackers, is it something that you may need to consider widening your people of wider, because today the influence is very different, which will come out. That's another challenge. So again, one other thing you might need to look into that is your account management or your NPS service or anything that you're using. You need to deepen it bigger, because the perception of who you are, we already touched it. I was planning to share the 30 touch point analysis, but because of the timeline, because I wasn't able to put it in a graphical format here, we are not going to do that. This is the biggest gap. Your message that your account teams tell to the same buyer is very different to what your sales team or big team write in the tenders or your marketing team post in social media. Today we track the touch point analysis of all 30 suppliers to just say, really, what do they tell the customers? If I'm a buyer, if I want to check your website, if I want to check your social media to decide, do I want to work with you? What are you posting? We just decided, and 98% of the time, it's like we have a tag called Baachu Share Love, which means we always talk about together, stay kind, etc. 98% of the posts that goes out from most of the companies talk only about my this one XYZ. So I don't care as a buyer who you are. So that's something. So today you need to connect that. To retain your incumbency, the messages needs to be consistent between sales, marketing, and your account management. If not, incumbency, it's total. Today anybody can be displaced. And as I mentioned, the private sector stakeholder matrix is very, very complex now. If you're working in the commercial industry, because we did a joint work with a very large, and I'll tell you, that's the company that tried to acquire us. And they are making it unnecessarily complex because they are seeing an industry out of it. So what that means is today your stakeholders is not just CPO or a chief procurement officer here, not just chief property officer. Your head of property, etc., is not even in this graph today. So because as we said, from 2019, when the convergence started to happen, it's the CIO who started to get into the closer loop. And property, for many of the banks, your key stakeholder is no more your head of property, is your CIO, because of the digital assets, because of the smart building, because of the property tech, or whatever you call it. So, and then they come into the circle, which means today, the whole thing about stakeholder thing is that, yes, you have the chief supply chain officer, because the supply chain officers now needs to go back and demonstrate who do they work with, why do they work with, and ensure that the compliance is there. So then comes your CPO, who's in the middle, your CFO who holds the budget, your COO who comes there. They are your key stakeholders. You need to, and again, being 0.2% to 3% of the overall spend, how can you get access to this? Even you could be a chief exec of one of the largest FM company, the closest you could get to a person could very well be the CPO, or could be a head of property, etc. And that's something, because the perception of FM is it's a low value added service, means engaging to these clients at the very top level it will continue to become a challenge. And it's not only that, it's the vendors. This is something which is a massive challenge for the industry going forward, which is not documented anywhere. When we start to reach out to these people, we have a lot of conversation because we carry no baggage. So, and the most influential thing is today, when we are talking about FM or digital FM or anything like that, who calls the shots? It's the vendors of these commercial buildings who support these guys. So you now need to know who are the vendors, key vendors. Is it Microsoft? Is it Accenture? Is it Capgemini? Is it Sopra Steria? Who are these key vendors who are actually integrated with them, who's doing the digital transformation? They call the shots on the buildings now. They influence the CPO, they influence the CIO, and you then need to sit down together. Because why? We need to do a reason we started to publish reports, which is not a state of art, I'm raising my hand, is because to educate these new stakeholders who now have been given the access to the property and stuff. So, and to flip on that side, yes, the stakeholder matrix has changed. Yes, the enterprise vendors are also coming in. But on the other side, the amount of business development sales skill in the industry has come down drastically in these 3 years. So today you have anybody and everybody. In most companies, like I would say 80-20, they only bid when the opportunity lands. Nobody or the talent or the skill sets of actually going and talking to the customer, trying to shape it, have some, it's totally reduced. It wasn't the case 5 years ago. It wasn't 6 years ago. You know why? I'll come back to that in the talent side. So this one, we just need to be very careful. And now comes the crux of it. So imagine a company acquires another company. Suddenly Competition Commission tells, hey, I want to check about this, or an investor decides to invest on this. These are all the numbers that's floating around what FMS, what FMS, again, all these are research companies. They go and do exactly, the interviews, the 30 companies and say, hey, what contracts do you run again? Hey, talk us about your market, talk about this. Come out with some amazing slide decks and say, this is the market. It increases 1.41%. It increases XYZ. With all due respect, total garbage. Because if somebody quotes the UK market in dollars, it's already dusted. The next comes the overall thing. So we, because we reluctantly entered the FM market, and I would say I reluctantly entered the FM market. And then we just started to build pipelines for companies. Today we generate, as I mentioned, we have done over 40 plus pipeline projects. Well, every time we generate pipelines for companies, that became a database. So then we added up the annual value of all the contracts and say, hey, we don't have all the data for all the contracts outsourcing. Nobody has it, but at least if we say based on the 14,000 odd data contracts data that we have, if I add all the annual value, how much does it come to? What's the annual size? As you know, that data changes every day. Every day, the same contract is procured differently. The same contract is coming different form. A new contract comes up, which means we have to refresh. But either way, the underlying principle here is what exactly is the FM market size? And today, if the acquisition is made based on this dodgy data or this kind of, whatever the data is, what decisions is the market trying to say? And because we haven't firmed up the FM, did you see the underlying principles of, I'm acquiring a company, Competition Commission is reviewing it. They're going to download this report and say, oh, okay, Mighty Plus Interserve has X percentage because I've added it here based on this. Boix plus on GOE quants is this. Did you see the decisions of what we do with the data that's available to us? And we, this was February, and now the number has changed already. February, we believe it's 110 billion. Last year, we saw 117 billion because we then need to go and remove all those unwanted contracts that was tagged as FM because we took it as face value. That's the challenge in itself. We have pumped close to 220,000 pounds on this. We're still breaking our head. And so it's a challenge for you, which means if you're forward looking and trying to understand the marketing data, what's the size of the market, where am I growing, different sectors, the only bottom up analysis is with us. And it's challenging because there are there are close to 912 PFI contracts related to FM alone, and that's not included. Projects, as we talked about, not included. Then you have additional services not included, and it's 110 billion. And so what's the exact market size? And now comes the other one. Now the other stakeholders on this is the investment funds and others. 2018 Caribbean crisis, that's the very first time we started to analyze the market on behalf of funders. Here is the hard part. 47% of the market, the investors, the long-term investors who used to invest on outsourced business services, FM-related companies, exited the market. So today you have somebody who's flipping like a software as a service type of company. Here we go. I want 30 times growth in the next 3 years, 5 years. Let's go and acquire a tech company, put them, rebadge them as an FM company, go pump them inside. Let's download some reports from these guys. This is it. That's it. Those are the investors today in the market. And they are in it for short term. To make it worse, today you see the stock, you can keep on pumping. I want this contract, I want that contract, but go back, it doesn't reflect in your share price. Why? Because it's commoditized. Because the ranking, the risk rating and the ranking of FM and the overall investment cycle is very low. Before people, very first slide I told you is about society, public, everybody comes together to create impact for this. But that's how the investors also thought. You go and B Corp investors are the only investors who are looking at it on a positive side. Otherwise, it's all flip and go. You know the companies that are still in the market because there's no long-term investors. The short-term investors doesn't see value on it. And to make it worse, when IFRS 15 came in 2018-19 after Caribbean debacle and other things, the way we say our bidding cost or additional cost, we get at least 3 to 4 calls a month on published reports of FM service providers and say, they have done this. What do you think this is? What's this cost about? Because we spend so much time, honestly, if you're talking to an investor analysis and stuff, we spend so much time in creating this financial accounts in a creative way where your investor who's trying to understand what exactly have you done is not done. Then we need to go to decode. Then it comes as a trust deficit. So the heartbreaking thing is 3 months ago when a large FM company hosted all their investors in the round table in their head office, we were asked to stand by. 8 of your key investors, is this statement true? Whatever he says, is that true? It really killed me. It really broke my heart, which is like, there you are trying to raise, look at us, how great it is. You know what, why? And that's the market, that's the challenge, which means your commercial value of the contract is going down. If you're acquisition-driven business, you are forced to go for acquisition to keep your numbers, just to make it look cool. You're just, it's not everybody, but many companies are making it hard for others to even consider to invest, and that comes in. Then you have the financial resident working capital. You saw in the recent tenders and CCS and stuff, most of the companies ask for, hey, we are not in a good position, can we do it? And that's where we are. Why this? And I'm just going to accelerate from here. So then you see the entry of these global IT BPO analyst firms. If you go and look at these firms, this is where the dangers start to come in. This was the trigger point for this whole thing, because whatever I said for the past things, it was always there. But today, this is the biggest threat, because these guys operate very differently, as you know, if you work with them, because they create a trend. Then they say the trend is there, everybody needs to follow the trend. Then 3 years down the line, they move to a new trend. Then everybody follow the trend, but they will never go and say this is, which means that digital, that RPA, that IoT, all AI, machine learning, this is happening world changing. So go back and say, you will hardly find most of it happening. But this is how they operate. Today, these are the companies in that commercial enterprise, especially, are advising people on property and ESG. And this is how things are moving from here. Again, are we prepared to face it? Yes, the first era was around sustainability. Second era was around, okay, we are creating value. And the third era, we are moving into CSR and social value. But again, the challenge is, think about it. A company which, a large company just found out that they could have self-delivered close to 300 million pounds worth of their contracts, which has been subcontracted, just because they were asked, or they are not asked, they have to use, subcontractors or local suppliers to deliver those contracts. Yes, it's good. Yes, it's social value. Yes, it's nice, but at what cost? At what cost, So, and yes, this company has did an analysis. Now they're doing white space to understand a lot more about it. But no, that demarcation between self-delivery versus SMEs is going to be a lot more challenges, especially for companies with hard FM background. Where do I self-deliver? Where do I this? What do I say in the public domain? What should I not say? The same obligation is social value. I have a CSR, that United Nations Sustainability Goals, but then there is no social value specific to a contract. The 30 bids that we worked on in this past 6 to 7 months, you need to research what should be the right thing for the particular local council or NHS or a local entity that you're supporting, public body. You submit the bid and you get on, run the contract. The social value that you need to do is totally different to what you have written. So, and then you still need to run what you have written, plus you need to do more, plus you need to be obligated on your CSR. These are the things. We already touched some of these things, and these guys start to predict. It's the same story. Now these guys are predicting this is the ESG, that's the overall thing, etc. A large manufacturing client is supported FM contract supported by another large FM supplier. They have to value-added services, took all the asset data, did all the stuff for them, ESG, net zero, and all these things, paid nothing. The same company instructed an IT company, paid them £5 million for sustainability consultancy. Same story with us as well. We go and do it because we work in the FM market, but these research companies work differently. We were paid £1,500 for 1.5 days for our work. Took whatever, repackaged it. The same thing was done into a big banking for £85,000. You face the same, I face the same. And together it's the same. But today there is a massive push on rate my company. And because if you see the whole market, how the whole market works, it's about who is good, who is great. And these are the 5 matrices. I'm gonna evaluate you in this 5 matrices. And now you are improved from XYZ. By the way, you need to pay $50,000 for that. If you pay that, then suddenly you'll be as a gold standard in the overall thing. And the enterprise companies then say, okay, we are being marked as gold by X company. We are great. Today, in the sustainability net zero market, for the past 12 months, we have been asked to come out with benchmarking on not just ESG, but FM in general. Who's a great FM provider? Who's a good FM provider? And what are they doing to improve, etc. I don't want to go back and do the same as these guys, but today the FM suppliers will be asked to do by the ESG analyst firms. They do that, and they're already doing it. The papers written by these companies, just to tell them, hey, we are looking good, etc., means that that's it. So, but on the top end, that's how SaaS companies work. Before they enter, before they go to market strategy, they need to get some endorsement. And these companies will be willing to give you an endorsement for a fee. They assist and say, hey, this is it. Their technology is great, and it goes in. It's then passed on to all their trusted listeners to go on. But today, wait for that to hit us. We decided not to do. This is the sustainability services ecosystem by one of the research firms. One FM company here. We had a massive conference just 3 weeks ago, Workplace Futures Conference, where I love the place, love the people around here. And the companies, they pour their heart out on what they did for the industry. But look here. Anybody here that we know? No. And this is what it's been shared. This is what's been shared to enterprise people. And we will be rock bottom to actually deliver the job, where we're not even there. Because even if you go and position yourself as a net zero consultancy, sustainability consultancy, they won't even pay you because it's part of your value-added service. But for other companies, it is what it is, So, and this is the same, and it continues. See, this is the whole industry. Look at the service lines. Whole industry started at £5 million. £5 million. It's what's the average market in FM? It could go somewhere between the £250,000 to £5 million. 60% of UK FM contracts are in the gap. 60%. Here is a consulting company charging £5 million starting for sustainability consultancy for the same sector, right? So it's the same thing on smart buildings as well, because today if you go and see, we all talk about now intelligent assets, etc. Look at the whole thing here. Anybody who we know, these are the influences for you. You cannot get into enterprises to do what you do in sustainability without reaching to these guys, without partnering with these guys, without having onboarding these guys. And that's the state of the market as we speak. These are some of the challenges that was raised in the conference recently. I know there's a lot more that was talked about, but no, this is the cost. If you go and look in the previous thing, a research company has projected the sustainability market is X, but here, see, the genuine analysis from OJEU tells us, hey, it goes 1.4 trillion to make us net zero. But why have those guys forecasted it's £1 million market? That's it. That's how they do. And that's the research report they published. That's how the influence work. And the same thing. Individually, FM companies are bleeding to pouring their heart out and say, hey, there is a problem we need to fix. But it's a lonely battle. And the lonely battle continues. And yes, is it just carbon? Is it just now it's going to be net zero and carbon for the rest of the thing? And we need to drive with it. And now comes the other ones as well. So I'm going to go more and more on this, and what we need to go in this main slide is just beware of these greenwashers. The greenwashers are companies who talk green, but honestly, they are not green. And you know what, this is what we found out just talking to the same guys here, because now we have to do the same thing what others we've been doing, because it's now tech plus FM. It's sustainability plus FM means these guys don't have FM. We are the only one who have pure play FM. So we are now working with them, and hence the acquisition request from one of these guys to us. But we are just going to give a good fight like what you are giving, but that's it. And I know I only came in here. This is me, by the way. So now what happened here is, what you heard today, I'll still continue. What you heard today is we started somewhere, but the whole business was created on people we serve. So what that means is we listened, we did what we can do, but now we are desperate, and we are asking people to do what they need to do. It's important because we continue to provide clarity and insights, but that means it's very hard. We can only do what we can do. When we listen to the sales and BD guys, okay, fine, we have trackers, we have this, but we need help. Okay, fine, we created the RAIN app. We then created the 30 plus tenders, the 30 plus pipeline projects, 14,000 trackers means we track what's the upcoming tenders that comes in, not what comes today. And then it moves on. So we started reporting because the marketing directors only had the fluffy report. So we started to do it. The CEOs want a trusted advisory. We launched our own memberships. Buyers, we started benchmarking. Then the same thing, the investors, we start to help with them. And then it goes. But today at the corporate level, without getting into the talent and stuff, these were some of the challenges in September to November last year. I can't find enough resource. This was post-COVID. After the 2 year into COVID, we just went on, and this is what, the unable to adapt in conditions is still there. But logistics, Brexit was a key one, but logistics, supply chain, that self-delivery versus SMEs is still at top. Can't find enough customers to grow. Again, the trend is pulling in the private sector. The contracts that got procured in 2018, 19, 20, anything about 2024 for the next 2 years, things will still be more or less in the same. From 2024, contracts that's been procured will not be procured in the same way, because the guys whom we mentioned would have shaped it differently. And you might be surprised where the integrator model will be more and more coming up, and the integrators won't be even FM companies, it will be tech companies. So what that means is, these are some of the challenges, but here's an interesting one. 912 people surveyed. What happens here? 25% not looking to change, 75% are looking to change. I know, we receive calls left, right, center. Most of you also, people are moving, people are leaving jobs, but people are looking for options. But it's much worse than you think. Some are actively looking. Some are like, I don't mind, I'm just going to be here, I'll just see what it takes. So there are close to 50% of the people within your sectors are actively looking to go elsewhere. In some companies, which you'll touch, it's not just, yes, we talked more on the growth function because that's what we operate, but it's gone beyond. In the top 10, FM companies, 6 have a change of guard, change of chief exec, change of MD, change of CXOs in the past 3 months. And some still have vacancies, 2 have resigned. So, and it goes on at every level, it goes on. One engineering company have 1,400 vacancies, 1,400 vacancies. So the problem seems to be pervasive. And in addition to all these things, this is the challenge. Where is it? Who is talking about these things? And it's the same thing today. This is the point. Out of the 912 people, 100 plus 106 or something are people aged 55. 98% of the people, 98%, which means except 5 or 10, 100 people out of this 112 people have decided, because of COVID, because of what's happening with the industry, have taken either we will take sabbatical, or we are going to completely leave the industry in the next year or 2. Some are considering as soon as 3 to 6 months. And that's your knowledge, that's your experience. On the other side, the 25 to 35-year-olds in the industry are looking at least for a 30% pay hike, 20 to 30% pay hike to keep them. On one end, experienced people had enough, moving on. Other end, incoming people asking for more than what they do. And that's this fudged middle, 35 to 55, who have to work long, late, furloughed, do what it takes to make it happen. And that's the overall thing. Again, the massive shift again is because we spread it too thin again, where workplace, future of work, future of workforce, etc. Unfortunately, the shift in the industry is also moved from customer experience to employee experience. So what that means is, again, who these guys who talk about employee experience, it's not you or me, it's the Microsofts, it's the Salesforces, it's the Workdays of the world. And those are the guys who talk employee experience. And the whole thing now is moving into employee experience. Again, why are we exposing ourselves on this, in doing this, where again, it's much more software driven. And this is from a latest employee experience report. I would love to see, anybody playing the game here, but that's it. But this is the underlying principle. This is the reason why I'm doing what it is. I don't know. I'm sure there'll be people from the IFMAs or the IWFMs or the RICs hearing to this. It's disappointing. It's really disappointing. These are the number of people, as far as we know from the conversations that we have with the FM people, were lost. 1,700 people we lost. During the time of crisis, we were celebrating awards. I wouldn't say we, some were celebrating awards. 2 years of down, March 23rd, the COVID lockdown happened. Many companies requested some of their employees who were not even part of their, not even part of the healthcare or the emergency service, the blue light. They moved in to serve their company, to be exposed into this voluntarily for the companies, risking their life. Is there any place where we know who they are? This request came from Department of Health so many times to the industry, to individual companies. Who are they? What they do? Is there anything you're going to do together? Anywhere? And it's all good. We are very busy talking future of amazing technology and stuff. You know what? We lost people. We are not army. We are not navy. I know I'm harsh because it burns me. One of the security guard whom I know, he was put into an NHS hospital. He passed away. Right? He was paid £32,000 a year, right? We all know that these guys are not paid in there. Where is it? 2 years down the line, are we just going to say one plank, one somewhere? Award started again by one, another doesn't even exist. The other one got inward auditory problem. Who is there doing what? The industry can't do it themselves. And even as an industry, the International Women's Day, we all did what they can do, but who are these people? Is there a day that we can going to commemorate on these guys? We light a candle on World FM Day every time, part of the business, but who are we? Nobody. Right? This is the thing. The challenges that you face is different, and again, I just want to close this and open up. Yes, there are some we have 25 issues, but I only picked up few because I think it started to hurt me when when the sustainability market enters in. Some are generic, some are data related, which we're trying to address on our own. And we have some founding members within Baachu. We have a Baachu Together program, and we are collectively trying to solve what it is, but there are certain limitations towards it. But you as an industry, you as a people who were listening to it later on needs to say, guys, the elasticity can only last long. And once it flips, it comes down. And how long are we going to pull this industry to more and more when we have underlying core principles like question like what exactly is FM, then go and amend the CPV codes to get what you get, then go and build this trust and relationship with your public bodies and also with your commercials and also with your investors, etc. And the BD skills which is not there, and so and so. And that's the message which I want to say. Yes, it's a hard thing to just say, it's yes, the FM market is screwed. There is a legacy because when I start to document, Baachu Talk FM, it started as Apple rated. We start to document the stories of these people from 1980s all the way to now. There's so many people who did everything. Many of you, 30 years, you fought for it. And today we just want to leave the industry in safe hands and to go to the next generation. And that's the thing that hurts me even more, which is like, yes, I came into the industry 5-6 years ago with 15 years experience in related government services and public services. But my heart goes to you, my heart goes to industry. But the challenge is there's underlying basic problems that we need to fix even before we go and talk all the great stuff about technology, sustainability, ESG, net zero, and other things. And that can only come in with these things. And this is our Baachu Together series. Every now and then, you can consider this as a rant, but every now and then we'll come back and tell you the honest truth. Whether you take actions or not, it's a different story, but I genuinely believe it's a responsibility to share what we believe in. So that's the whole thing here. Why are we always at the bottom of the value chain? And why do we spread ourselves too thin? That's the open-ended question. I just leave you there. I know I should have done it earlier, but I'll just open it up. Any questions? Let me stop the recording. Any questions you can ask me? We're more than happy to share. The slides and recording. Slides won't be delivered. Recording will be available for 3 days, and then we'll remove it because I shared a lot more than what I should share. Any questions or anything, put it in the chat box. I'm more than happy to talk through anything. Anybody? Oh, a lot of good friends here. I can open up. You can talk. Right, David has written a definition for FM. I think it's important. It's again, it's getting really wide, right? And it's becoming very difficult for the industry to sustain if it goes like that. But no, yes, tenders come in, we all are winning, we all are celebrating, good. But underlying foundations is really shaky, and that's my point here. So and I know, I thought Friday is a good time in the morning. Maybe I'll do a Tuesday afternoon as we normally do. Any questions, anybody? Apologies if I ranted too long, but it's important because we have some data points, we have conversations, and that's the trust we have built in this industry. And I thought I'll open up and share it with you because again, we have some lot of good friends here. We'll just leave you out to take your Friday out. Again, the recording will be there, but just be mindful when you're working for public sector. Be mindful with your OJEU trackers, what you do there, because you're missing a lot of opportunities. And when you're talking to people about market size and others, when your marketing team or sales team and others who talks about it, just be mindful again what messaging we are telling to the same buyer. When you're working on commercial contracts, just be very mindful. Who are the technology vendors? Who are they listening to before you and talk about net zero, sustainability, etc. Because you are talking to deaf ears there. They might have been shaped very differently by those people. So, and then the rest comes on board. I think it's important for you to be human, and that's the very, very end point which I mentioned. And then we just go from there, really, because it's because if we don't, I know we look after our people because this is a people business, but it's important to also remember that we lost some people, and government wants, that was an opportunity for us to get back in the table in a human level. We could have connected to the people whom we wanted, but we flipped that. and that's my frustration. But either way, the Together series will continue every quarter. I will see what we can do. But next comes the rain number webinars on what contract comes up, when does it comes up, etc. But I'll send you maybe a snippet of this thing in a short summary rather than send you all the slides. But otherwise, thank you for joining. If you don't have any questions, stay healthy.